Just give me the green signal so that I can start. Like, let me know.
Okay. Yeah, maybe like 1 more minutes, then we should be getting started.
Okay, I'm just going to be back within 30 seconds.
Okay, sounds good. Yeah. Yep, I think we should be good. You can get started.
Perfect. Okay, so welcome everyone. Enam gave a little bit of introduction for me, but I still have a slide on my introduction, and I think that can set the context. So I grew up in Bangladesh. I studied here and kind of lived my entire life in Bangladesh, predominantly Dhaka, but there was a few years in Chittagong. Undergrad was from North South. I did a major in finance and then a major in economics as well. So I finished that in 2008, and then I went for my CFA, finished the 3 levels in 2011, and then 2013 I kind of completed my work experience required to get the charter. So that's like one side of the story, which is like pretty much someone who lived his entire life in Dhaka, Bangladesh. And then the other part is while starting my career, I got a kind of a lucky break, and I got introduced to this frontier and emerging markets equity fund called Caravel Management. So they were based out of New York, and they were looking to hire someone in this time zone, especially in Dhaka, Bangladesh, simply because unlike say Pakistan or Sri Lanka or like some of the Southeast Asian countries, Bangladesh had a weird problem. Information and data was not widely available. So people could just log on to Bloomberg and they can pull up research on Pakistan stocks. There were like bunch of analysts. There were like Merrill Lynch guys having an office in Pakistan, Macquarie having an office in Pakistan, but that was not available in Bangladesh. So that's why I kind of got that break. And that when I joined, they manage about $200 million. By the time I left, I think that's about $500, $600 million. I think the funds probably peaked at around 800, like after I left, $800, $900 million, something like that. The interesting part, like the founder of the company, James Harmon, he was a very connected guy. He used to be the chairman of US Exim Bank. He also was an advisor to Barack Obama. And I think his travels to the developing world, the emerging world, the frontier world, actually kind of made him understand that this is like going to be the growth area for the future. So he created that company with that fund, one of the earlier frontier emerging market funds, and I kind of, for me, I think that was like a very, very important part of my life, because someone growing up in Dhaka, Bangladesh, but getting exposure to a bunch of people working in New York, and they have a very different mindset to investing compared to someone in Bangladesh. So I stayed with them for 4.5 years. And then I worked with for local brokerage BRAC-EPL for some time, and then again another UK-based firm which was named Exotics back then. They were a British firm owned by a billionaire called Michael Spencer. They were into Africa, so they did investment banking in Africa, stock brokerage, and also some distressed debt in some part of South America and Africa. And they wanted to kind of expand into South Asia, predominantly Bangladesh, Pakistan, and Sri Lanka. And they, while expanding the team, a few of the clients recommended that, okay, you can talk to this guy. He knows the space, we know him. And they kind of contacted me to join their team. Now, I think just to clarify a little bit on what Inam you were mentioning, like I work for an American company, I work for a British company, but most of my time was spent sitting in Bangladesh. I would travel back and forth from time to time, but I wasn't like full-time based in either of the countries. And if I look at the specialization, it was equities in that early part of my career. And also it was frontier market equities. So I never really covered stocks in US or UK. So that's that. And then comes the edge part. Like in 2017, me and some of my close friends, we thought that, okay, we have worked for 8 years. Why? And since we decided to stay in Bangladesh, I think it would be good to start something of our own instead of working for someone else. If we are a firm believer in the Bangladesh growth story, why don't we do this? Because with the entrepreneurship, the upside is open. Obviously, yeah, there are downsides, and what's the worst that can happen? The worst is kind of the business fails, and we thought that, okay, we should be able to get jobs. That's not going to be a problem. So we started Edge Asset Management back in 2000. We applied for a license in 2017 and then got the license in 2018. And the other one was Edge Research and Consulting. So the difference between the two, you can say asset management is buy side. We were managing money for people via mutual funds and separately managed accounts. And research is by kind of sell side. Initial clients were basically equity asset managers. We have American funds like Alliance Bernstein, British ones like Schroders. We have ones in Edinburgh, like a Standard Life Aberdeen. So kind of lots of these foreign funds who look at Bangladesh subscribe to our equities research. And then we had a few different types, including Deutsche Bank, Cargill, CDC, who were looking into debt markets in Bangladesh, and that okay, Edge is already doing work on the equity side, but some of them can be kind of used for our debt side as well, because we want to know the economy and also what's happening in the banking sector, etc. And so we kind of have been branching out into different areas over time. And then the last bit is that we are going to apply for a venture capital license, and I'm going to talk about that asset class in a while. So we are just at the initial stages of forming the company and then applying for a license. So if everything goes well, we should get the license next year, and then we should think of our first venture capital fund as well. So that's kind of my background. And I think what I wanted to point out is that, one, I have always been in Bangladesh, so I kind of understand the local context, right? Those of you who have invested in the developed markets, it's extraordinarily different from an US market or a UK market compared to an India market. We are like quite a bit different in terms of market maturity. But at the same time, because my counterparts and I've been working with international people, I understand that mindset. And actually, when we started Edge, that was exactly the mindset that everything we do, it's going to be research driven. It's going to be backed by a lot of analysis, and nothing is going to be speculation or short-term myopic thinking. So it's going to be, there has to be some logic. That's really the point. Okay, so moving forward, right? Going to the topic that we have, I think, forget NRBs, right? Like even when I think about people that I know in Bangladesh, right? Any of my relatives, I talk to them. The moment I talk about like, okay, I work with the stock markets, the capital markets, right? There's a clear, strong negative connotation attached to that word in Bangladesh, and the answer is like pretty simple. If I look at like 10 people, like even 100 people, right, who have invested in the market, I'm sure like 90% have lost money. In the country. So you can go ask your relatives. I'm sure you're going to get a very similar answer like that. We have lost money in the stock market. So it is a difficult place in one sense. Again, it's an easy place in another sense. But in general, there are a lot of issues. And before we talk about where to invest in, I think it's good to begin with what are the challenges, and that's where I think the idea of without getting burned comes in. I think obviously you want upside, but you have to protect your downside at all times. So that's the thing. So I kind of flagged 3 areas here. I think one is lack of investor protection. I think the institutions in the country, and this is not just capital market institutions, it's like the legal system. It starts from like the really, really top. These are still not super strong enough, which gives a lot of protection to minority investors, whichever asset class you're talking about, right? Even in areas which are like not investing, even in areas like e-commerce, you will see that people are losing money, various different things. There is a legal system. If you want to get like if you go and want to get your problem addressed in that system, it can be very time consuming, it can be very expensive. So this is one issue. These things will change over time, but it's not going to be a rapid change. And so anytime I'm doing any sort of business, I mean, putting my own money to work in startups, in any asset class, anything in Bangladesh, right? The first thing we look at is the reputation of the people, because I, as an asset manager, if I want to steal your money, I don't think there's much you can do about it. So it's only in this country, it's only when you choose the right counterparties that you're safe. That's number one. Number two is the lack of intermediaries, right? Sometimes it's not just about the governance aspect. I think it's also that you, as an NRB, you want to invest in the stock market. You, as a Bangladeshi living in Bangladesh, you want to invest in the venture market or the stock market or whatever market, like fixed income asset class, right? We haven't really built up a critical mass of the right intermediaries who can really guide you, who can explain to you what are the options, what should be the most appropriate for you. And also, like, unlike in like the Western world or the developed world, right, where you have financial advisors that looks at your risk profile, that looks at your age, demographics, blah blah blah, and kind of creates a plan for you. We don't have that. We don't even have a financial advisory license in the country. So if I tomorrow, if I kind of start that business, okay, like a few days later, I could get into some legal trouble, because that's not a, it's a gray area. There's no license. So that's that. So this, I think, compared to the first one, which is the investor protection one, I think this is an area where I see a lot of things happening. So I see local companies springing up. I see some NRBs actually coming back to Bangladesh, setting up startups, trying to address some of these problems. And I see that, I think with the growth of the startup ecosystem, I see that the trend will only accelerate. So this access to investments problem, I think, will be actually addressed. It's going to be a matter of time. The last one is the lack of investment framework. What I mean by that is, I think if you're investing from, let's say, Canada, you are investing Canadian dollars. And once you want to repatriate the money back, you want the money back in Canada in Canadian dollars. So what's the process for investing in that money? There is a process, but the thing is, these processes are still quite complex. There's an account called NITA account that you have to open up. It involves a lot of paperwork. In the past, that you would have to come visit Bangladesh to kind of open up that account. Same for a stock brokerage account. It required by law a wet signature, which means that you have to be physically present to kind of give a signature. Now, in 2021, if I ask someone sitting in London or Singapore or New York that you come to Bangladesh to give a wet signature to invest like $5,000 in Bangladesh, it simply doesn't make sense. Now, again, here we are also seeing things improving. eKYCs are opening up, and we are seeing the regulators getting more open to the idea that, okay, we should adopt technology and kind of ease up things. So I think these have been historical issues, historical challenges, but some of them are mitigated, and the other ones are not really mitigated immediately. But it's up to you to avoid the risk, which is like the choosing the counterparty part. So that's the three things. So we'll move on to if we have so many problems, right? Why invest in Bangladesh? For an NRB, the whole world is an option. Like, you go on to Robinhood, you go on to some other brokerage, and you can invest pretty much everywhere. Like, you have direct investing options. You can do index funds. You can do ETFs. I'm sure a lot of you guys are doing cryptocurrency. So what's the point of like actually spending all this time navigating all these challenges and investing in Bangladesh? So I have 4 points here. I'm going to go over them quickly. So the first one is economic performance. I think Bangladesh economy has been it's a large market. That's the first part. We are one of the most populous countries, and we just hit that interesting mark of $2,000 per capita. And a lot of magical things start to happen at certain inflection points, and I think that's very important. And the other point I want to mention is the resiliency. I think this is a word I used to hear about from a theoretical perspective, but in the last 10 years or so, 10 plus 10, 12, 13 years, I have actually experienced it. Like even in the pandemic period, I think the Bangladesh economy has been fairly resilient. And some of the things that gives us that resiliency, I think one is definitely the low levels of debt. If you look at the countries and economies that are really, really struggling, Turkey is one right now, Sri Lanka is another one, Pakistan has also been struggling. All of these guys have lots of debt. Bangladeshi debt levels are still, public debt is still below 40%. The other one is actually linked, which is the currency strength. Like Bangladesh typically, despite being a net commodity importer, we usually run current account surpluses. So if you do like a 20-year currency comparison, like between Bangladesh and neighboring countries, I think Bangladesh would be the best. I think, except for perhaps Vietnam, which would be kind of similar. But again, a large export-oriented country. Probably that's the only country I would say in this region which probably outperforms Bangladesh as well. So I think that's one point to kind of one reason to kind of have the country in the radar. Number two is informational advantage, right? There's this term in finance called home country bias. Like the people have looked at other people's investment portfolios and see that they have a very strong bias towards the country in which they live in. So people living in US tends to invest largely in US. People living in Australia tends to invest largely in Australia. And the reason for that, why? You have informational advantages living in that country. So for someone who is of Bangladeshi origin, the ease with which you can do due diligence, whether it's on a particular startup, on a particular company, on a debt, that instrument that's being issued, it's going to be much easier than a foreigner who has no connections. You can just call up 5 of your friends, 3 of your relatives, and kind of figure out who's who. And especially for the governance aspect, right? Like you want to know the reputation of people, how good or bad they are. This part, you clearly have an advantage. How well you can use the informational advantage, how well you can use your network, that's kind of a different thing. It depends on your intellect, perhaps, but you still have that connection and relationship with the country. Third one is a valuation convergence. Again, it's not applicable to everything, but if you look at bond yields in Bangladesh, like risk-free bonds, for example, right? Compared to the rest of the world, these yields are much higher. If you look at equity valuations, like compared to other peer countries, maybe similar levels of development, similar sizes of population, you can actually see a lot of stocks are much cheaper in Bangladesh compared to that part of the world. Third is actually even in startups. Early stage startup valuation, mid stage startup valuations are also much cheaper. So this is not going to stay like this forever. As the country grows, it's going to become important enough where larger investors kind of take notice. And if you have followed some of the headlines, we are seeing some big name investors look into Bangladesh. Like, for example, SoftBank invested in bKash. That's a large name. Peter Thiel invested in ShopUp. That's a large name. And we are going to see more and more of that happen. And this valuation discount that we are seeing, it could actually move away. So that's another point to kind of consider that, okay, we should have exposure to the country. And the fourth one is portfolio approach. This is not a Bangladesh point, but this is a point I make to everyone investing. People ask me, is this the right time to invest in stocks? Like people in Bangladesh, or should I invest in stocks whatsoever? So my point and answer is that it doesn't have to be binary. You are not like putting all your money in the stock market, right? It's a portfolio approach. If you are risk averse, if you are at your retirement age, put a small amount of money, put 5% of your capital, put 10% of your capital. If you're young, early, want to take risks, you can go 30, 40, 50%, whatever. And similarly, for an NRB as well, you're investing in multiple asset classes, in multiple geographies. You don't have to invest a large sum in Bangladesh. You can invest a small sum and kind of get diversified. Like, for example, if you look at the US market valuations right now, they're pretty high. I think everybody would agree. They have been high and going up higher and higher. But why not just reallocate to some other markets, some other geographies where the valuations have stayed low for a long, long time? So that's kind of another perspective to put. Like, put a small amount of money, learn the market, learn the system, grow your context, right? And then when you are more confident and when you see valuations super cheap or attractive, especially in public equities, you can actually invest a large sum. So 4 reasons I mentioned here why you should invest in Bangladesh. Okay, so now we move on to what are our options to invest. What are the instruments or asset classes we can look into? Okay, so the first one is, I think, on equities. And in equities, I would say the easiest way to take exposure is via open-ended equity mutual funds. So instead of you trying to decide what stocks to buy and sell, you instead develop an expertise on who the best fund managers are, whether they have a right investment process, whether they have a good return track record, how does the management team look like, how the portfolio has been allocated in the past, and stuff like that. And so I think that's the easiest way to invest in the stock market. Now, you do have option to invest directly in the stock market. Like you can buy the stocks directly. Like you can buy Square Pharma or Breck Bank or BAT, for example. I think it's too time consuming, and if you're not deploying a huge sum of money, if you're deploying a small sum, it's better off. You're better off like spending that time in more value-added stuff rather than like doing number crunching in Bangladesh. So to invest in Bangladesh, then let's say you want to invest directly in the stock market, you want to invest through a mutual fund manager, right? You need something called a NITA account. So you need to open this account through a commercial bank. Some of them allow individuals to open without coming physically. Maybe you have to send through the documentation through like some courier service later on, but this can be done kind of remotely. You don't have to come. So I think we have made some progress in this area, the opening of the bank account that you need. Another group of NRBs actually have assets lying in Bangladesh. So I actually received this question even today from someone. He has money in US, he has money in Bangladesh. His question is that, do I use my Bangladeshi passport to open the accounts? And do I invest from the Bangladeshi account, or do I want to invest from the US account or like the Canadian account? So the answer is very simple. If you have the assets in US and you want to invest in Bangladesh, but you also want the option to repatriate the money through official channels, then you open the NITA account and then transfer the money, the foreign currency through the NITA account and invest in Bangladesh. That way, if you want to repatriate your profits or principal or capital amount, you actually can take the foreign currency back home. If on the other hand, you have the money in Bangladesh, you have like some ancestral property, like you have some inheritance or some other things in Bangladesh, right? You can actually invest directly from Bangladesh. Solves you from the hassle of going through the NITA. But there's also a tax perspective, right? I think some of you who have assets in both countries, you are probably reporting the Bangladeshi assets to the Bangladeshi authorities and the US assets to the US authorities. If you are investing from Bangladesh, the capital gains tax is 0. So all the gains that you're making, you can actually keep the gains tax-free. If you are reporting to US authorities, I don't know about the capital gains tax, but I'm sure it's not 0. So there's a tax issue as well. So that's one thing. But so what you need is a NITA account, and you need to choose your right fund manager, and they can work together to ensure you get your investment. Now, I'm going to not go into a lot of details in each of these for time, but obviously in the Q&A session, feel free to ask me that how to choose a fund manager, where do I get the return history, blah, 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 all the questions that you have. Next is fixed income. So in fixed income, I think for an NRB, the answer is very simple. You should definitely look into the US dollar premium and US dollar investment bonds. So these instruments typically give a return of 5 to 7%. In one of them, I think the 5% one, I think both the principal and the interest is you can get it back in US dollars. And the 7% one, I think you get the principal back in US dollars, but the interest is in Bangladeshi currency. So both, I think, by global consideration, are very attractive yields. And as I mentioned, typically Bangladeshi currency has seen good resiliency. So in most cases, you can choose both of the options. But there is a cap. You can't invest more than about 1 crore taka, which is like about $116,000. But still, I think that's a good number to be invested in. And given that Bangladesh has low levels of debt, pretty decent GDP growth, and also I mentioned about the currency risk as well. I think the chances of default is extremely, extremely low. So that's on the US dollar premium bonds and investment bonds. So again, for this, you need to come through a commercial bank, a Bangladeshi commercial bank. I think easier experience could be with the multinational banks like Standard Chartered, if you want to invest in the US dollar bonds. The other option is fixed income mutual funds. We, until recently, did not have fixed income funds, like the law did not permit that, but we have seen a number of such fixed income funds come up. I think they can also give you a decent return, not like exceptional return, but if the fund manager is skilled enough and kind of understands the interest rate cycle very well, that's also, I think, an asset class you can look into. So let's say you have a lot of money, you have exhausted that US dollar premium bond limit, and you have some more lying around, then fixed income funds could be an option. The fixed income funds, obviously, again, just like the equity mutual funds, would need a NITA account. The third category is startups. I think the way to invest in startups would be through venture capital funds, or you can go through angel syndicates. Now, just to mention, we have Bangladesh Angel Network, which is kind of the largest angel syndicate right now. I think they have done a phenomenal job in bringing in NRBs into the venture ecosystem. And they are building, they have built a good team, they have a good pipeline of investments. So, because when you are trying to invest in startups, I think deal flow is extremely important. So sitting in US or sitting in Canada or some other place, you want to be, you want to see the good deals. So I think angel syndicates is one option for sure. The other one is like, you invest in a venture capital fund directly. So instead of you kind of doing the work on the startups one by one, you can go into a venture capital fund. And additionally, one hybrid thing you can do is when you go into a venture fund, you can actually tell them, look, if the startups you're investing in have co-investment opportunities, we may be interested. So as the venture fund invests, they can actually show you deal flow if there's available room. And if you like that fund, that particular startup, you can actually put in extra amount. And I have seen that happen. Now, again, for VC funds, you need to open that NITA account. So I think this is a common parameter across all the asset classes that I'm mentioning, that if you want to invest from abroad, again, if you want to invest from US or Canada or London, Singapore, and want to take your money back at the end of the investment period, you need that NITA account. So that's that. But also, so for VC funds, you need to do that. For direct investments, I think you can do a bank transfer, and then you can issue shares through the bank transfer. Like you transfer the money to the startup's bank account and then issue shares. Another interesting development is a lot of the good startups in the country, they are actually registering abroad. Most popular destination is Singapore. So they have the holding company in Singapore. Some of them are also in Delaware. So for people abroad, they can actually invest in the holding company directly. So that kind of solves you from going through the hassle of sending money to Bangladesh. The last asset class I want to talk about is real estate. Now, you would see that I haven't written anything. It's like nothing, it's empty. Now, why is it empty? I think there's a few reasons. One, this is an asset class I'm not very familiar with. I have never invested in land for different reasons. So I'm not an expert on this area. But I think a lot of people are comfortable with land. They understand this asset class, especially in the context of Bangladesh. They can navigate the legal challenges, the land registration challenges, or like the property rights challenges, that you have a piece of land, someone else comes in and kind of takes it up like just by force. So how do you kind of navigate that? So some people are good at that. So it's definitely a large asset class, but I'm simply not an expert on this. But again, I think what I expect to see is startups emerge that kind of start solving these issues, similar to like they should be able to create quasi like REIT type structures where you can invest in a fund and they kind of invest in properties, get rental income, or like kind of invest in development and kind of sell it. So that sort of options could be there. I am not yet very familiar with that. Maybe if I do this presentation 2 years from now, I will have more information because I'm actually starting to spend a little bit more time on this asset class. So these are your 4 options. I think to begin with, the easiest one is the US dollar bond. It's risk-free, like at least default risk-free, more or less. I won't say fully, but I think it's quite less risk. And given that the country has a lot of FX reserves right now, this looks to be fairly safe. I think option 2 would be your equity as an asset class, and option 3 could be startups. But I think some people can even skip equities and go into startups directly. Again, personal preferences. So that's the asset class. Okay, so I'm gonna let's have a quick look at our time. Okay, not bad. So I have one more slide here, which is that what can Edge or what can I do to help you guys, help NRBs? So I'm going to go over them one by one. One is a daily newsletter that we have. It's called the Daily Edge. So if you want to just start out knowing the lay of the land, what's happening in the economy, what's happening in regulation, you should actually subscribe to the Daily Edge. It's free. I gave the hyperlink, the link in the page. And from every Sunday to Thursday morning, Bangladesh time, you're going to get an email with a curated list of economic business news. So I think that could be of use. Number 2 is Sanchoy. We actually developed this platform for Bangladeshis, but I think we would actually expand it further for NRBs as well. The main objective of Sanchoy is basically to make investing easy. I'm going to explain what I mean by that. In the country, if you do want to open a bank account physically, you go to a bank, take a form, come back, fill it up, go back to the bank again another day. Maybe you have missed some documentation, come back home again. So oftentimes it requires 2 or 3 visits to the bank, and oftentimes it requires a few hours. So we thought, okay, if I have a platform where people can input their information once, and that information is stored, then anything you want to invest in, whether it's open-ended funds, if whether it's like fixed deposits, whether it's the government bonds, for example, right? Why can't we generate forms in one click? Because I already have your information. I have the forms from the banks, right? Why can't my system actually kind of connect you directly? So Sanchoy actually does that. So you can actually sign up there. In fact, you can also do equity investment as well through Sanchoy. So we have partnered up with merchant banks. We have partnered up with like commercial banks, blah, blah, blah. So that's another platform that can help you. In terms of the equity funds, we have 2 equity mutual funds right now. It's open for both locals and internationals. So the first one started in 2018. It's called Edge Bangladesh Mutual Fund. It's kind of a balanced fund that gives both equity and fixed income exposure. We also have a growth fund, which is like more equities. So both of that one, the second one came out in 2019, and both have actually beaten the market quite comprehensively. And even in benchmarking with our peers, we have done quite well. So just to kind of give you some numbers, the first one, net of fees, we have about 12% per year. Second one, net of fees about 14-15% per year. So this is after all fees in terms of return. And I think in the same period, Dhaka Stock Exchange would be about 5-6% or so, something like that. Fixed income fund, we don't have one, but we just got permission. We are going to launch it in 2 months or so. So that's going to be our first fixed income mutual fund. So that's another option for people who want to explore. In terms of venture capital, I actually mentioned earlier on that we are going to apply for the license and then start with a small fund initially. So again, if you're lucky, we should be able to get that rolling next year or maybe year after. The last part is the investment research part. If some of you want to invest institutional money, so just like the foreign funds, you can actually subscribe to the investment research we have, whether it's equities or debt. So we kind of have a pretty much a very comprehensive set of solutions. There's something for everyone, and obviously, even if you don't need any of this, you can just subscribe to the newsletter for free. So that's so far what I have prepared. Like I intentionally did not keep a lot of prepared materials. I wanted to do a lot of Q&A, and hopefully we can spend the rest, whatever time we have left, doing questions and answers.
Thank you very much, Bhaiya. It was really good, and there's a lot more information that we do not know about how to invest in Bangladesh. So thanks for all the info. So people, if you guys have any questions, feel free to ask. Nobody has any questions?
I think someone has to break the ice, and obviously you can ask me anything. Like you want to ask about the economy, about like literally anything, not a problem. Right. I think someone raised a hand.
I think so.
Ainul Islam, yeah.
Hello, assalamu alaikum. My name is Ainul Islam from the UK. I have several few businesses in Bangladesh, IT as well as a new startup, Amar Pharma. The problem that I see, and I would just like your advice is are these misconceptions of investing in Bangladesh slowly breaking down? Or do you see, or is the misconceptions permeated through the government legislations? And is there a way of helping us break these negative aspects, especially when it comes to Bangladesh? Because there's growth, there's opportunity, which some of the Western countries will not be able to keep up with. So can the government help in breaking some of these barriers down?
My personal thought is the government can help in the process problems, right? Like I mentioned about the structures and the challenges in opening a NITA account, opening a PO account, right? But the rest of the issues, right? Obviously, also the legal, the property rights issues that seem to pop up from time to time, right? Those are also important issues. But the rest of the stuff will probably happen on its own, and I think private sector entrepreneurs, startups, intermediaries such as ourselves will have to play an important role. And the most important thing is, like just like every other place, more people will invest if the initial group of people see success. So successful experience will bring in more investors, more players in the system. I think that's my feeling. And I do see some changes. I think compared to the past, like where Bangladesh was almost ignored by the rest of the world, I do see um, that we are getting more on the map, but still lagging quite significantly behind even neighboring peers.
And then do you see that as an opportunity for startups to minimize some of this, minimize some of the difficulties?
Yeah. So there are two ways which are interesting, right? I think the first one is that startups could emerge to solve these problems. Like for example, in India, there are startups that are exclusively focusing on allowing Indians to invest abroad. So outward investment, which is allowed by the Indian law. I think per year they can do $100,000 or something like that. So the startups, okay, they are focusing on a niche and solving that. So similarly, there could be startups emerging that focuses on helping NRBs invest in Bangladesh. And once you use the startup mentality, which is like, innovation, creativity, using like very good UI, UX, all of design thinking, right? All these challenges that we see in the conventional routes can gradually get addressed. So I think that's one. The other interesting part about investing in startups or like starting your own startup in Bangladesh, I think that's another interesting perspective, because like if you want to invest in a good startup in US or forget US, but even in Southeast Asia, we are not like, I am not going to get access. Simply, I don't have the access. I don't have the network and the connections. Like big name VCs will go in and kind of push everybody outside. So in Bangladesh, that hasn't happened yet. So big name VCs are not coming in yet, maybe not at early stage. So someone looking at the ecosystem can actually identify interesting good startups and come in before others. Now, this opportunity can actually it may be time sensitive, that may not stay like this forever. So I think that's why, at least in the startup ecosystem, in the startup space, whether you want to be an entrepreneur or whether you want to be an investor, I think the big opportunity is going to be in the next few years.
That's in line with what I've been thinking as well. I come from an investment background, especially within private credit, and ESG is one of the biggest topics everybody is talking about across the world. What's your view on ESG and Bangladesh, especially, maybe a bit bleak, but especially the challenges that Bangladesh has with rising waters? There's a lot of comments around 2050, a lot large percentages of Dhaka being underwater. What do you think is the biggest challenge for Bangladesh under the ESG banner, and is there investment opportunity as a result?
So the thing is, it's a very valid question, and one I have received before as well. I think we are definitely okay, just give me one moment. I'm just going to put on my let's connect the laptop to power. Just give me a moment.
At the same time, guys, if anyone wants to join the group, I'm actually creating that invite link, so you guys could be able to join our Discord group. So we got around like 500 people right now, so feel free to join.
Okay, so going back to the question, right? I think Bangladesh is definitely one of the most climate vulnerable countries, vulnerable to environmental issues. Having said that, we are at such an early stage in terms of financial market development, and also in terms of capital market development and country development, right? In focusing on ESG is actually not at the top of our priority list. When I talk to bond issuers, when I talk to investors, like if you have an option of investing in a green bond compared to a conventional bond, right? Would you be willing to kind of invest at a lower yield, right? Nobody is actually gonna willing to kind of lose that extra yield just because you're investing in greens. Having said that, so I think broadly it's a bit too early for Bangladesh, and we have other very small problems. Very small problems. I actually switched my video off. Sorry about that. But anyways, we have other smaller problems that we have to kind of address first. But eventually we'll get there. But having said that, again, there are a few developments. One is we just, the SEC actually created a framework for issuance of green bond. That's number one. Number two is that Bangladesh Bank has been working a lot on green lending. And I actually was part of a IFC funded project that created the green bond, that's creating the green bond taxonomy and guidelines. So, and there are a few incentives for issuers in terms of lower fees and all for green bonds. And we actually have seen about 3 issuances already. So I think 3 green bond issuances, because the consulting team that we have worked with, they also mentioned that it's very early stages for even other parts of the world. So in certain areas we have made progress, and I think quite fast progress. But again, broadly ESG has, unlike the rest of the world where it has been a buzzword literally, that sort of buzz has not been created in Bangladesh yet.
No, fantastic. Good presentation. I'll let you take the chance to answer other questions that people have messaged.
Sure, thank you. If you have further questions later on, you can connect with me offline or in LinkedIn or some other way. So okay, so I have someone actually messaged a question. Maybe I should answer that one.
Right.
Okay. So how inflation is going to impact Bangladesh in the near short term and in the next couple of years, in your opinion? So let me give you a historical context to inflation in Bangladesh first, and then talk about the current situation. So historically, when I started my career, 2008-9 period, and then the next 10-12 years, inflation used to hover at around 7 to 8%. So that's kind of the norm I have seen. Like when global commodity prices went up significantly, it would go up to 10-11%, peak around that level, and then fall back. Now, what we had seen in the last few years is actually inflation falling down to low levels, and it's been at around 5.5-6% for some time now. One thing you have to be very clear about, that what is the government reporting and what I believe is the true inflation. So there are times when I would think that true inflation is higher than the government reported, but there are times when I would think that it's kind of similar. And how I kind of think about this is basically anecdotal evidences on commodity prices, on real estate rents. So I kind of follow these and track them to get my own picture. And there was a long period when what the government was reporting, it felt to me it's kind of similar to the reality, and that's about 5.5% or so, 5.5%. Now, today, however, we have much higher inflation. Now, government is also reporting higher, but I think that in reality, it's even higher, like whatever the government is reporting. This one is actually import driven, because obviously we have all seen that commodity prices have gone through the roof, and they have, some of them are quite a bit above pre-pandemic levels, both energy and non-energy commodity prices. So I think for the current point, we will be experiencing high inflation. My guess, again, I'm not a statistician, I'm not a trained economist, but my guess is real inflation is probably 9-10% or so. Government probably is reporting slightly about 6%. But on the other hand, I think that the great commodity super cycle of 2000 to 2010 that was driven by the Chinese economy and some of the other emerging markets, I think that is not going to come back. The current inflation we are seeing, it's a lot of supply chain disruptions. There are other factors that can work, but a lot of supply chain disruptions as well. So I would expect commodity prices to normalize globally, and to Bangladeshi inflation to also normalize with that. And I think if you look at some of the commodities, like rice prices have fallen, oil prices have fallen. I think I went into the world, I think it was the World Bank or IFC commodity price outlook. They're also expecting softening next year. So unless Bangladesh Bank goes for like huge monetary expansion, monetary policy expansionary policy, where you create a lot of demand pull inflation, I would think that inflation will gradually get muted by next year. So I think that's kind of my thinking on inflation.
So I got a questions related to that inflation. So if it's like 7-8% inflation, and you were saying your fund is generating about like 12% to 14%, right? So is that for 12 and 14%, which is including the inflations that we are seeing? I mean, if that's what I'm trying to understand.
Yes. So actually, again, if you look at the historical return, when at that time inflation was about 5.5%. Right. And our fund was generating, one of the funds did about 12%, the other one was about 14-15%. So right. So both are nominal. So which means that so the fund return is not real; it's nominal. It includes inflation.
So is the same thing with the bond market investing in Bangladesh? The people who are actually the foreign investors investing in Bangladesh bond market, the risk-free one, is that also the nominal one, or it just? I mean,
yes, it's all nominal. So one interesting thing is, unlike the equity markets where we do have a lot of foreign funds, like big name funds, I have worked with Morgan Stanley, I have worked with like HSBC. HSBC actually is a client as well. I have worked with like Goldman, who invest in Bangladesh equities. We haven't seen a lot of fixed income global funds invest in Bangladeshi bonds yet. Only a few handful of investments we have seen. But to answer your question, yes, if you're a foreign investor, you take the currency risk, but you also take the inflation risk as well. But at the same time, because the bill bond yields are cyclical, just like other markets. If you get into the government bonds at the peak of the cycle, you can actually make a lot of money, because inflation, like I said, it's not going to stay at 7, 8, 9%, right? It's going to fall at some point.
Right. Yep. Okay. I think we got a couple more questions.
One is on diversification of portfolio to gold and commodities. So, so gold you can buy. There are a few ways to buy gold. One is you go to a jewelry shop and buy gold. That is the wrong way to buy gold, because you lose a lot of money that way in transaction costs, and that kind of destroys the purpose of diversifying into gold in the first place, because you lose too much. Some people bring in gold coins from Dubai and stuff. I am not sure how easy it's to sell them, but maybe that's one option if you want to invest for the long term, right? Like say if if Bangladesh was in Turkey's condition where people have lost faith in the currency, maybe that protects your asset. So that's one thing. Now, both gold and commodities, like if you are in a developed market, you would take exposure by the futures market, which we don't have in Bangladesh. So with that option to invest in the securities, the underlying assets, without like taking inventory of the underlying asset, I think that's not here. I know it's not available in the country. But the recent development is Chittagong Stock Exchange have requested the SEC to allow them permission for a commodities exchange. So the SEC gave them permission. I am still waiting for timelines on how long this can happen, and maybe if we have a commodities exchange first. And why Chittagong? Because Chittagong is the port city. All the big commodity importers are operating there. So there's a large informal market of the paper trading without an exchange. But with an exchange, I think it gets more formalized. So while if that can happen, we should see some more improvements over time.
So we got questions from Rob Hashim, like what are the key challenges for foreign VC that you can foreign VC that you can help solve?
I'm not 100% sure I understood the question, but I'll try to kind of answer. I think for when you say you, I guess you're thinking of edge. I think what we can help is the local market color, the local market context, like, and most importantly, to understand the ecosystem, what customers want. Like, if a startup comes up with an idea that I want to create the Robin Hood of Bangladesh, right? Theoretically, it makes very good sense. It has worked in other places. It should work in Bangladesh as well. But then you have the second degree, third degree thinking that how many stock investors do we have in Bangladesh? Is it like 1 million or is it like 100,000? And then if it's 100,000, what's their age profile? How many of them are above 50 and can use an app, for example? How easy is it going to be able to transfer them? So I think this understanding of the market, the customers, the politics of the land, I think this is where someone who sits in the country and has a physical base in the country can help solve. But at the same time, like, because of our exposure with foreign investors frequently, I think that allows us to understand the psychology and mindset. So that's kind of my thinking. I think Khaled actually clarified something on his question. I think this was about global ETFs. Unfortunately, the Bangladeshi foreign exchange law is very clear. A Bangladeshi citizen and someone living in Bangladesh cannot invest a single taka abroad as an individual right now. As an institution, a Bangladeshi company can invest abroad, but that requires permission from the central bank, which is a long and bureaucratic process. And so far, permission has only been given for foreign direct investment. So you want to set up a factory somewhere, you want to acquire a company somewhere, that's the only place where permission was given. But me, Asif Khan, I want to go to US, open up a bank account and deposit money, invest in US stocks. By law, that's not allowed. Now, people can find unique loopholes by which they can do it, but I'm just telling you the legal perspective. Okay.
And if you guys could like speak up about the questions, that would be pretty great.
Sure. Okay. Shahjan Bhai has a question. Are there live or near live market prices available for Bangladesh government bonds? Has anyone produced indices? Are there historic time series data available for government bonds in Bangladesh? Do you provide data? Okay. Again, a very good question. With bonds, we don't have live prices right now. Mostly because these government bonds are traded over the counter at the moment, and they are not listed in the stock exchange. But there is a team, a high-powered team that are working on this, where all the government bonds will get listed. So once they get listed, we should see some transactions happening through the stock market. And just like the stock market price data, you will get live data from like the stock exchange itself, from other data providers like Capital IQ, Bloomberg, or FactSet. So that's going to happen. Right now, the data may be available, but it's not like live. Maybe there's some lagging. And there is a kind of a Bangladesh bank has an exchange like bonds, but it's rarely used. Like, we did some bond trading from our funds, and it was all done over the counter. So basically, we looked at the primary issuances of bonds, and that gave us a signal on what the valuations look like. And then we called up some banks and got quotes from them, and for the best quote, we kind of executed with them. So that was that. Has anyone produced indices? I think there is a report by CFA Institute, which I was one of the 3 authors, and I'll try to find that report and maybe share with you and also with Enamul, which is a guide to the Bangladesh capital markets. I think that can be useful for everyone here. So there, I think another co-author, Najmul Ahsan, he's the head of treasury at Midland Bank. I think he created his own index with data that he has compiled. So I think that is that's relevant. So since he has created an index that kind of answers point 3, I think that sort of time series data is probably available to commercial banks. So the treasury desk would probably have the data. I unfortunately don't have that data right now.
Any questions, guys? So I got one more question here. So as because we all from Bangladesh and we do have some assets in back home, and when when I talk to my parents, right? So they are not comfortable enough investing in the Bangladesh stock market, even if you talk about the mutual funds and all other things, because the way the entire manipulations from the government side and the other organizations actually does. So how it would be possible to like convince someone in Bangladesh, like, all right, there is a possibilities that the market is growing, and if you invest money into the Bangladesh stock market or other asset classes or bond market, your money will be protected, and it's not going to be like something like somebody came in and just crashed the entire market. So how are you going to assure this kind of situations for the local investors in Bangladesh?
Actually, that's a great question. And I think I kind of signaled to this point at the very early stage of my presentation. There's a huge trust issue.
Right.
When we started back in 2018, this was the biggest problem we had. Like, I could go to anyone and pitch my story that why don't you invest some money with us?
Right.
And the barrier there is the lack of trust. And I can't blame people as well. Again, people have been burned in this country, burned in MLM, burned in e-commerce, burned in the stock market time and again. So the way I how we solve the problem, like we are trying to get more and more investors. So we solve the problem. We went to people who already knew us, who already knew that we have the capabilities in terms of the knowledge and also the integrity. So they put money first. And then once we started building a track record, right, which is publicly available. And by law, I am sharing the portfolios every 3 months. I'm sharing my net asset value. There are return comparisons being done by other research houses that which funds are doing good and bad. Then they are referring, my first clients are referring to others. Right now, we literally almost have no marketing. Like, it's all word of mouth. Because there is, like, while there's a lack of trust, there's also a huge investment problem. Huge investment problem. Like, people have money, they don't know what to do. And especially when the last 12, 18 months where the interest rates had crashed literally, when your inflation was 5-6%, a bank fixed deposit would give you like 3% pre-tax. After tax, it's going to get 2%. So we have seen interest grow up. So again, to go back to how to answer that question, right? There are a few different things. One is we have to prove that there's going to be return of capital, because in Bangladesh, more than return, and this is, I'm borrowing from my colleague Ali Imam Bhai, who is actually also on this in this call. He says that the biggest problem is that people don't return back your capital. Once you have given money to someone, he can get away with not giving the money back. So you have to first convince there that, okay, these are trustworthy people, and you can talk to their clients, other clients, and verify for yourself or judge their reputation to first be comfortable there. Number two is the return on capital. Now that one, again, we have data to back it up. Forget the broader market index. The broader market index is not relevant in Bangladesh, the stock market index at least, because out of the 300 companies or 350 companies, most of them will not cross my corporate governance filter. So we at Edge, we look at like 20, 25, 30 companies. That's it. Those are the only companies which I think are investable. And then there you have valuation filter, something of could be too expensive. So if you look at the long-term return performance, like 15, 20 years, we have actually done that math. And again, I can actually share it to you and so that all the people here in this call can get that data. I think it's about 14-15% return, which is per year on a 15-year basis, which is great returns.
And it's compounded each year.
Exactly, it's compounded returns, right? So even if you did a buy and hold of the top companies in Bangladesh, right, you would get that return. And on top of that, if you're getting exposure to the open-ended funds, you can actually look at the fund returns as well, whether they have beaten the market, like on top of the market returns, right? Has that particular fund beaten the market? Now, and the last bit is, I think people always feel that the stock market is very different from the underlying companies. Forget the stock market, forget the daily prices, forget it for a while, right? You have to think that I'm investing in real businesses. I'm almost like a private equity investor. I'm in it with this business for 10 years. So for me, for example, when I invest in Bragg Bank, I know that, okay, Bragg Bank owns like 35% of Bikash right now. And this is a company I want to stay invested with. They are a very strong, fast growing fintech player. I wouldn't mind investing in this for 5-10 years. Same for, let's say, Square Pharma, the #1 pharmaceuticals company, growing top line at, let's say, 10%, and return on capital is, invested capital is like almost 40% or so. Same like BAT. So there are these companies like Marico. These are market leaders. They are growing. They are good companies. If I own this company 100%, for example, I wouldn't want to sell. So why can't I buy today, for example, when I have 0%? So I think once we get that concept, then the idea of market manipulation, or someone can actually hike up prices for temporarily or push prices down. I think it's very hard to push prices down. The manipulation usually happens on the other side. You kind of do pump and dump. You pump it up and then dump it. But if you are buying stocks with good fundamentals, good management, good owners, with a proven record, a product segment that is still growing and underpenetrated, and you have a long-term horizon, the short-term prices simply don't matter.
Okay. Okay, I think we got another question. We got two of them. Suppose I want to invest in Bangladesh Stock Exchange. How am I supposed to get info of all the existing stocks and their profiles? Okay. So I think it's most probably you could go to the DSE. I think they do have that kind of things. I don't know. You probably could able to give us the answer.
Sure. So the first thing is that if you go to DSE, you will get the list of all the listed companies. You can get some basic data like what sectors they're in, their sizes, their market capitalizations, the revenue, profits, some profit history, blah, blah, blah. The next step you would do is go to the company websites. So each of the company will have a website where they're going to upload their annual reports for a number of years. You're going to get the quarterly financial statements as well. So you can do, you can delve into that number. And obviously the next level is that, say you are looking at Renata, it's a pharmaceutical company. And you have looked at their annual report, you have like downloaded their financial data in Excel. Now what you would do is look at their competitors which are listed. So you would go to Eximco Pharma's website, you would go to Acme's website, you would go to Square's website, and that look at their number and compare across the all these 4 players, for example. So that's kind of, this is exactly what we do. We look at the publicly available data, and then we go one step beyond. Then we go and talk to these company managements. We talk to their competitors. Sometimes we talk to their distributors to kind of get a kind of a 360-degree view of how the sector industry is doing, who is positioned in which segment, what's the competitive advantage of each, what are the regulatory challenges, stuff like that. So, but I think the starting point is, as Enamul mentioned, it's Dhaka Stock Exchange, and then you go to the company websites for more further details.
So I got one more questions. Like you said, Bangladesh is like around like 300 stocks into the DSE, Dhaka Stock Exchange. You are investing only 30 to 40 companies. So when it comes to the regulations, like as long as I understand from the perspective of United States, when you register stocks into the stock exchange, you have to go through the regulatory issues, and you also submit those quarterly and yearly annual reports to the government. So the ACC actually goes through all those kind of things, how the business is operating, if there are any kind of like situations where we have seen that the top executive from those companies, they actually fly away with tons of money. So is there any kind of process the government is taking care so that if we come back to the country and investing into the stock market, this kind of thing is not going to be happen? Is there any guarantee from the government that providing regarding those companies?
No, there is no guarantee, because when you are investing in equity,
right,
it's a risky asset class. You are
right,
becoming a part owner of the company struggles and fails. And even
right,
if there is corruption, clearly there is no guarantee. And I think it's not just in Bangladesh, it's the rest of the world as well.
right.
And as I mentioned very early on, just to kind of clarify this point, I mentioned that, and especially in Bangladesh, the legal system is still very complex and time consuming. So you have to have extra protection in deciding which company I want to invest in. So you only want to invest in companies where the owners are clean, they don't have bad reputation, they have earned wealth ethically, and that reputation is clear. And also in terms of management as well. Like sometimes the owners are fine, but the guys managing the company are not fine. So you want to be partnered with the right people. And even in the developed world as well, right? You have listed companies which have done a lot of wrong things. So
Right.
even who have passed the US SEC scrutiny or the UK authorities, right? But let's say, like, I can go on and on and on in terms of companies. So it's not just, this part is not just a Bangladesh problem, but in Bangladesh case, I think the problem may be a little bit larger. But as an investor, it's like buyers beware. It's up to you to save yourself.
Do the like ACC actually inspect those companies like time to time, like to go and see what's going on with their stuff or something, just to make sure that like they are not doing something bad, taking the public's money and investing into their businesses?
Okay, so some things are happening. So for example, I think in terms of reforms here, a few different important reforms have happened. One big issue in Bangladesh was the quality of the financial audits. So companies would get their financial statements audited, but these audits were not like done properly. And even when the wrongdoings were caught, nothing happened to the auditors. Now, for that, there was the creation of the Financial Reporting Council. So it's a high-powered committee that would look into the wrongdoings of the audit firms and kind of penalize them. The moment we saw the creation of this authority and the council, the number of the auditors giving qualified opinions, which is like saying that companies are not complying with the right accounting rules, that went up rapidly, like hugely. So which means that this was clearly a major step in terms of improving data integrity. The other area I've seen the SEC clamp down is basically on dividends, and some companies have a tendency of not giving dividends properly. They would hoard cash on their balance sheet, and then look, you can hoard cash, but as long as you're using that to productive use in some way or form, it's fine. But sometimes companies kind of hoard cash, and that cash is used for the wrong purpose. So that's where the SEC actually clamped. In fact, a lot of listed companies were giving loans to their sister companies. So you are the shareholder of the listed company, but you're not the shareholder of the other company that the owners have. And this listed company was giving a loan at, let's say, 0 interest or like concessionary interest to the sister company, or giving a loan guarantee to the sister company. The SEC has clamped down on that. So and these companies actually, I have already seen some companies bring down the loans to 0. But having said that, again, remember, this is still a young country. The SEC also has bandwidth issues. They don't have a lot of people. So I think while they seem to be going the right direction, again, a lot has to be done to bring the financial markets at par to, let's say, respectable standards.
So another questions bring up like the political instability in Bangladesh, right? So how foreign investors who are actually coming to investing in Bangladesh, if the government changes and the different government has come up with different kind of strategies, and if they like wiped out all the regulatory things from the previous government, how that can impact to the future investors? Like, so is there any kind of like guidelines from ACC that it's going to be, you will be protected in some other way in the regulation side or something?
I think, again, SEC as a regulatory authority cannot promise anything to you, because
Right.
their job is to kind of uphold the integrity of the stock market, ensure that there's a level playing field, ensure that someone is not like cheating others, like stop insider trading, stop pump and dump, stuff like that. SEC cannot predict political cycles, and they cannot protect you from political issues. So I think we shouldn't expect that from SEC. But I think one major change for good or bad in this country is the cycle of election violence every 5 years, which creates a lost year for the economy. That has gone away. Right now, we don't have an opposition. There's one party, and they're firmly in power. So at least I think the upside of this is basically you have some policy consistency and you have some continuity. So I think that sort of uncertainty has gone away. But interestingly, even if you went and looked at the pre-single party rule period, where you had a political party change power every 5 years, business people were actually very accustomed to that. Like they knew how to plan their capex cycles, how to do with that violence and uncertainty. So they have almost, even though there's an economic cost, they were fairly resilient to that sort of violence. That's the only thing I want to add.
Okay. And I think we got another questions from Khalid Hassan. He was asking, how do you de-risk your portfolio on a systemic level, considering that the only assets that are available are equities and bonds, and they both underperform during periods of rising inflation?
Okay, so the answer to this, I would borrow this from Seth Klarman. I pile up on cash. Now, a lot of investors don't like holding cash because they think that for the periods so when by cash I mean cash equivalents as well, checking account or a savings account at the bank. Now, for the period you are keeping money in cash form, you are losing money in real terms, right? But there is an optionality to cash, meaning that today both bond and stock valuations may be high, considering the interest rates and inflation. But in 2 months or in 1 month, the valuation would probably be low. If you have used up the cash, then the problem you have is you don't have the option to buy it at the lower level. So if I feel that both the asset classes are expensive and overvalued, I am very comfortable holding on to a ton of cash. And that's kind of my go-to approach. But sometimes what happens is, even when you have a period of rising inflation, you can have certain stocks which are undervalued. They may be event specific. There could be some other, there could be some acquisition, there could be a merger, there could be some sort of earnings surprise for that company, which is not built into the stock price, even once you incorporate the higher discount rate due to the inflation. So sometimes we have invested in those stocks in that period. And again, for bonds as well, you could sometimes find such mispricing. The market is very inefficient in both equities and bonds. And I think the fact that the market is inefficient in Bangladesh, the participants are not very smart, gives an opportunity for the patient investor. So sometimes you would get abnormal mispricings, which you can take advantage of. And I remember some bonds had convertibility option. Like you could buy the bond and they would convert into equities, and you had an option to that. And I participated, which was almost a no-brainer because the conversion rate gave you almost like a guaranteed return, very high. So you had that option. Other thing you can do is in a rising interest rate period, you can buy short maturity treasury bills. So you minimize your duration, and once the interest rates have peaked, once it's all priced in, then you moved your bond portfolio to longer maturities bonds, so that when interest rates fall, you actually have capital gain. So it's a combination of like holding on a lot of cash and then finding the limited bargains that are available, mispricing within the asset class, like not on the whole asset class, but within the asset class to kind of maximize your return.
Okay. And one more question is related to your fund, actually. So what's the percentage of fees that you guys charge when someone trying to invest through your Edge Consulting?
Okay, so the Edge, because it's our fund, right? So the fee structure is actually fixed by the Securities and Exchange Commission. So right now it's roughly about 1.5% per year. That's the management fee. As the fund asset under management will grow, it's going to go towards 1%. Now, the way the SEC set up the fund fees, it's fixed for everyone. On the equities funds, it's like that. It's like for, let's say, from 0 to say 20 crores, it's a fee of say 2.5%. From 20 to 30 crores, the fee falls. So as the asset under management goes up of the mutual fund, the fee actually falls. Now, this is clearly higher than the rest of the world. But if we look at least the best performing funds, they have all generated sufficient alpha over the market, like return over market, even net of fees. So I think for now it's fine, but in the future, I think just like the rest of the world, fund fees will fall. So if the regulator allows us to reduce fees, we'll also do it in line.
Okay. Any other questions, guys? And you also mentioned that you guys are trying to get the license for the fixed income market and also for the venture capital, right?
So fixed income, we don't need the license. It's done by the asset management license we already have. And we
Okay.
already got the permission for the fixed income fund. It's inshallah going to get launched in 2 months.
Okay.
So that's at a very, very advanced stage. And then we're going to have a Sharia-based equity fund after that. So maybe mid next year. And in terms of venture capital, we are going to apply for the license now. So just see how long it takes.
Okay, sounds good. And one more questions about your shonchoy.com, right? So shonchoy.com, is it kind of like Shonchoy Patro thing? I mean,
so no. So basically, we created it to make investing in Shonchoy Patro easy, but it's almost like a platform that makes investing in multiple asset classes easy. So not just Shonchoy Patro, it's also you can invest in mutual funds through the platform. You can do fixed deposits through the platform.
Okay.
You can open bank accounts through the platform. It's still at a MVP stage, but you can check it out. I gave the link, but there's an access code that you need, which I can also provide.
Okay.
And we are still working on the platform. Again, just to clarify, right? When you are using Shonchoy, you are not going to give any money to Shonchoy. Shonchoy is just a connection. It just makes your path easy. Ultimately, the money will be given to, let's say, the bank you are putting money in or the mutual fund you're putting money in. So we are not holding any of your cash.
Okay. And another questions coming up when you were saying about informations, how do you guys protect the foreign investor informations? Because what kind of security you guys use? Because when you actually giving away our like passport information or social security or something, how it could be protected from like hackers or something, that so that our information is not going to be like misused by any other organizations?
Okay, so this is a great question. So first of all, for the international investors who are working with us, they're predominantly on the research side. So they only take research from us and they trade through their own brokers. So we don't know what they're buying and selling. So that's a different group. For individuals at Shonchoy, the information security is basically, again, it's a work in progress, but we have been working with some cybersecurity experts. So it includes like hardware security, like securing the router that we are using. It involves like other like protection schemes, but I think there's a lot of work we need to continue doing there as well. So I'll just I wouldn't say that we are foolproof yet, but we are continuously working. Again, Shonchoy is still an MVP right now.
Okay. So another thing that comes to my mind about related to the Shonchoy Patro, does the foreign investors has that kind of like capacities to investing into the Shonchoy Patro? Because I heard their returns is very good. Like somebody told me like about like 13-14% return from the Shonchoy Patro if you're investing into that.
So Shonchoy Patro returns are very good. It's not 13, 14. I think when you do effective interest rate, it's about 10 to 11% on Shonchoy Patro, the 3-year and 5-year one. But the issue there, it's not a big issue, but it's a slight issue is that Shonchoy Patro limit is 50 lakh taka per person. So that's about maybe $55,000 to $60,000. That's point number one. Point number two is on Shonchoy Patro, you basically, it's a BDT denominated instrument where both the principal and interests are given out in local currency. Now, so it's you are taking some currency risk when you're investing in Shonchoy Patro. When you are investing in the US dollar premium bonds, right, which I mentioned, right, the two types, one of them have both the principal and interest in US dollars. The other one has the principal in dollar and coupon interest in Bangladeshi taka. So it's a currency hedge part. Now, which do you choose? Now, one interesting thing, if you do a long-term chart of Bangladeshi taka versus US dollar, the depreciation we have is not a linear line. It is like it happens in every 3 or every 5 years suddenly. So if you are investing right after a wave of currency depreciation, you may be safe for another 4 or 5 years. So in that situation, maximizing on the BDD denominated Sanchoy Patro is the safest or smartest thing to do for an NRB. For a local, you can't do the US dollar bond in any case. Your only option is Sanchoy Patro, and you don't really mind because you're living in Bangladesh. Who cares about currency inflation, currency depreciation, right? But if you are in a period where currency has not depreciated for a long time, then you may go for the US dollar one. But the other interesting part is, even if you so if you go for the pure dollar interest and principal one, 5% versus the Sanchoy Patro rate of 10-11%, I think the unhedged one, like the local currency, is still better, because even if I look at the average historical depreciation versus the dollar is about 3%. So if you deduct like 3% from 10-11%, you still get more than 5%. So I think long term maximizing Sanchoy Patro may still be smart.
Thank you. Any other questions, guys? I think we are almost on the time limit. If you guys have any questions, feel free to ask. I think that's all, actually. Thanks a lot, Bhaiya. It was really good and very knowledgeable information for us. And we are actually thinking, a couple of us actually thinking to start investing in Bangladesh. So hopefully you will be our contact for in the next couple of years regarding to that. And thank you again for your time and the knowledge you have shared to us, and really appreciate about that.
No, happy to help. I think I am very passionate about this. So when the moment you said that you wanted to start to something, I said, let's go for it. Because we need to bring in smart investors in Bangladesh, because that's what will increase the efficiency level. So that's that. And I'm happy with all the questions I received. I think they're all very relevant for the investors. So like I promised, I will try to share a few things. One is the capital markets guide from CFA Institute. I'll try to share the long-term equity market returns of the blue chip companies. What else did I promise? Did I say anything else?
No, I think that's all, actually. Yeah.
Okay. I'll try to share this too.
Yeah, I'm going to share that to the rest of the other people into the group. And thank you again. And I think education is very important about understanding the infrastructure of investing in Bangladesh, because we really wanted to invest, because I grew up in Bangladesh, so I do want to invest in Bangladesh. But the regulatory issues and the government things, and bringing money and also investing money, that's a kind of a hassle that we don't have that kind of ideas how we actually would enable that kind of pathway. So really thank you for your knowledge. And I think in future, we'll definitely keep in touch with that matter.
Okay. Bye-bye, everyone.
All right. Thank you, Bhaiya. Bye-bye.